A historic shift in market leadership is taking place today. On this Friday, June 26, 2026, Nvidia officially replaces Apple as the largest single weight in the Russell 1000 index. This reconstitution is driving massive passive rebalancing flows and late-day volatility, marking a new chapter in the market's technology leadership.
The mechanics of today's rebalancing are massive, as passive funds tracking the Russell indices must execute their trades right at the closing bell. Coinciding with the end of the quarter pension fund rebalancing, we are seeing a huge clash of capital flows. In addition to Nvidia's rise, private sector giants like SpaceX and CoreWeave are also officially joining the index, creating a significant reshuffle of technology weightings. Despite the short-term rebalancing volatility, investors are analyzing the broader health of this equity cycle. The current bull market, which began in October 2022, is 3.5 years old. While some warn of valuation stretch, historical data suggests that this cycle remains relatively young by historical standards. Looking back at history, post-World War II bull markets have shown remarkable durability. The average length of these past 7 cycles is approximately 7 years, with the shortest lasting 5 years. Even if this market is in its later stages, historical benchmarks suggest there is still room to run before a structural peak. Furthermore, claims of a historic bubble ignore the major valuation reset that already occurred in 2021. During that period, massive drawdowns in speculative technology stocks and early artificial intelligence plays washed out excessive froth, building a much healthier and more sustainable foundation for the current cycle. In the near term, however, technical pressures are mounting. The S&P 500's 20-day moving average has begun to decline and is projected to continue its downward trajectory throughout next week. This declining average acts as a dynamic resistance level, keeping the near-term bias cautious. On the macro inflation front, energy markets delivered a massive relief valve today. Brent crude oil prices collapsed to $72 per barrel, down from $110 last month. This sharp drop followed the signing of an interim diplomatic agreement between the United States and Iran, leading to the reopening of the Strait of Hormuz. While $72 oil is a welcome sight for inflation concerns, the speed and scale of the sell-off has raised some growth worries. A drop of this magnitude in global energy benchmarks can often signal a cooling of global demand, creating a complex backdrop for overall economic growth projections. Macro worries are being compounded by the latest inflation data. Headline personal consumption expenditures inflation rose by 4.1% year-over-year, coming in hotter than market expectations. Driven by persistent energy and service sector pressures, this print signals that core inflation remains stubbornly sticky. In response to this hot inflation print, market expectations for monetary policy have shifted dramatically. Market pricing now indicates a 76.9% probability of at least one more interest rate hike before the end of 2026. The hope of immediate rate cuts is fading as the market adjusts to a higher-for-longer outlook. In the private markets, funding cycles are adjusting to more conservative liquidity conditions. Reports suggest that OpenAI is delaying its initial public offering plans from 2026 to 2027, influenced by recent public market price volatility. Meanwhile, SpaceX successfully completed a record $25 billion bond offering, drawing huge institutional demand. Technically, both broad indices and leading stocks are entering a defensive phase. The S&P 500's intermediate-term trend remains bearish below the 7,370 resistance level. At the same time, Nvidia has compressed to a price-to-earnings ratio of approximately 32 and is testing key support at $192. To wrap up today's Daily Digest, our watch list heading into next week is focused on 3 areas: the continuation of Russell rebalancing flows, the mid-cycle bull market benchmarks, and key index technical levels. Watch Nvidia's support at $192 and the S&P 500's resistance at 7,370.